Hello and welcome to tradingfloor.com's weekly equity update. We are well into the second week of New Year and the earnings season has officially kicked off. Investors are keen to see how strong the indications are of global economic recovery. The big names from the tech sector to kick off the season was Intel, and that reported much better than expected earnings. So we ask ourselves, is this the shape of things to come for 2011? And with us today to discuss these insights is Christian Blaber, Chief Equity Strategist here at Saxo Bank. Welcome again, Christian. Good to see you again. And so we kick off another round of earnings season, and I suppose this is a chance to see what the effects of this much anticipated QE are, and we've seen the kick-off from Intel. So if we start with Intel, what have they reported to us that's so magical?
What did they reported to us was a surprise to the upside on earnings. And as you know, earnings has sort of two legs, namely sales and margins. But on both legs, or both dimensions, they increased their sales growth. Their sales growth was better than expected, and margins increase was still better than expected. We have been saying in the yearly outlook that we don't expect margins increase to be that potential anymore because we are very close to prior periods peak. But Intel definitely beat that expectation quite well. So that was the one thing. They beat it, all expectations for 2010. The real good issue is that for Q1, at least, they said we're going to beat expectations here as well. And the main driver of this was the server replacement in industries. And this is usually an indication of the companies now start to invest again, namely this replacement cycle of hardware and then software following is an indication of that companies, and especially those who are in charge of investments in companies, now tend to believe that the recovery is here and will continue.
So if we look at infrastructure and IT, that's really at the core of industry. So is this does this have a good indication of the general outlook and sentiment moving forward?
Clearly it has. Intel, what you just need to remember with Intel is that if you look at their sort of regional split, it is still emerging markets who's driving their growth. But the US is actually picking up. Europe is a bit sluggish, as we expect also, due to, our expectation for GDP growth in Europe in 2011 is 1.4%, 2.7% in the US, so it's almost twice as much in the US, with the upside sort of potential in the US especially. So the point is, the picture that Intel paints is very similar to our sort of general economic outlook. But what is very sort of enforcing in our belief that the economic recovery is there and will continue is that the companies now have started this very, very vital investment cycle. And that was actually sort of what sort of started or triggered the real crisis, not the financial industry, but the fact that from one day to another, companies simply stopped investing and started shredding off people and labor force, and actually halted investments for almost 2 years. So this is a very, very important indicator.
And if we have a look at another important earnings release from Posco, can you give us some background into also why their release is important?
Well, their release is important because they are a producer of basic materials, steel and aluminium. And unlike Alcoa, they actually see a quite significant sort of both sales growth and margin growth. What their statement was that they have been pressed on prices and decreasing margins quite significantly, but now they're sort of having breathing space again, so to speak, pushing margins up again, and they also see significant sales growth, especially coming from emerging markets. Posco said very clearly that this is an emerging market story. So it's pretty much in line with our expectations in terms of GDP growth, but it's very sort of, not nice, but it's very good to be confirmed from real money and real people that this is actually going the way we expect it to do, sort of in looking from an aggregate perspective.
And from the financial sector, at the time of this recording, JP Morgan will be coming out shortly.
Yes.
What are we expecting to see, and what's that going to tell us?
We expect to see a massive surprise to the upside from JP Morgan. It's going to be a party on in JP Morgan. And first of all, we expect to see 2007 as the all-time high record for JP Morgan ever in terms of earnings. And the major driver is also in Q4, the reverse of loan loss provisions, taking money that's put aside to cover losses on loans from the balance sheet into the income statement and back to the balance sheet just on the other side. They will do that in a range of $1 to $1.5 billion. Last time they did 1.5 billion.
And for next week, what are the earnings reports that are quite important for us to look out for?
Well, there's a lot of reports next week, but the ones to look for is definitely Google and Apple, IBM, General Electric, and Goldman Sachs. There are a lot of big names out next week, but these are the ones I would pay especial attention to.
Okay, Christian, look, thanks for your time again. And don't forget, you can visit tradingfloor.com/equities for articles and reports from Christian and other equity analysts. And you can also follow us on Twitter at tradingfloor.com. Thank you, and we will see you next time.